morning class. Assalamualaikum. How are you today? Him. Okay, now turn to the page 183. We are gonna to study about the real estate investment trust. Okay, now let's talk about the definitions. Okay, what is real estate investment trust? It is a special type of unit trust that invests or propose to invest is at least 50% of its total assets in real estate, including land, building or shares and bonds in real estate company. Okay, it is also known as a property trust fund. The rental income will be its main source of income. Okay, next, the rate or real estate investment tax must be approved by Security Commission. Inland Revenue Board will be issued or already issued Public Ruling 5 2017 governing taxations of real estate investment trust, taking effect on 8 September 2017. Basic period for year assessment of real estate investment tax or real estate investment trust may or may not be financial year end, which is 31st December for every year. Okay, that's the surface I'm gonna to teach you today, but we are gonna meet you at another class in this week. But to remind all of you, we're gonna make our quiz or test regarding this text, which is real estate investment trust, next week. So I hope all of you gonna study at your home and excel during the quiz and or test that I'm gonna make for next week. So that's all from today. If anything you want to ask, you can ask now, and I will be here to assist you. Okay, thank you.
8:01 p.m.
What a tight day for me. Got many things to be done. After a long 12 hours, it's about time for me to get some rest. Oh, I forgot something. I need to call Shafiq to tell him to ask his classmate to make a presentation. Where is his number?
Shafiq call? Hello, Assalamualaikum, sir.
Hello, Shafiq. Waalaikumsalam. This is me, Serafiq, your lecturer for text. I want to tell you to ask your friend to make a presentation regarding the real estate investment trust.
Okay, what? Presentation? Check the rate.
That will be presented this Thursday. You're okay with it, right?
Okay, this Thursday. Okay, my bro.
Because next week I'm gonna make the test for real estate investment trust. So I want all of you to perform well during the test. That's why I ask you to make a presentation. Okay, don't forget to tell your friend, huh?
Okay, sir. I will inform my classmate.
Okay, that's all from me. Thank you.
Okay, sir. Thank you. Bye. Bye, sir. Bye-bye.
Day 2.
Assalamualaikum. Wah, so happy ya?
Life must happy, bro.
Presentation done?
What subject?
Text mah.
Oh my god. I'm not done it.
Seriously?
When to submit?
Submit what? Present.
When to present?
Next Wednesday. Thursday.
Have
Many times.
Okay, okay. I ikut you.
Okay, let's relax first.
Okay, okay, okay. Allah. Hello, Assalamualaikum. My name is Muhammad Fitri and I will be presenting one subtopic on real estate investment trust. Okay, the subtopic is rental income. Rental income uh, is a business source, so it falls under section 4A and let's see what's next. Okay, how to treat business related expenses. The treatment is the any expenses that is related to business it is deductible. Okay, there is two questions. What about if the expenses is more than income? And how to treat the unutilized capital expenditure? So the answer is it is permanent loss. Permanent loss, which is any unutilized or expenses that is over cannot be carried forward to the future year. Okay. So next is okay, capital allowance on qualifying capital expenditure. There in rate we can get two capital allowance because the QCE can be arrive in any expenditure to arrive rental and also any expenditure in business rate. Alright, rental source arises when it is ready, which is the property is ready to be rent, and the revenue expenditure and also the capital allowance will be made available once the first rental payment received. Thank you.
Thank you to my friend Fitrino. Next, my name is Ricky. I would like to explain about exemption of income. Okay, REIT is a special type of unit trust. So the exemption of income available to unit trust is also available to REIT. Okay, 4.4.0 fraction of permitted expense section 63B and special deduction for qualified capital expenditure. Okay, REIT is not required to apply the formula in section 63B and the claim of deduction of qualifying expenditure against rental income is as stated in section 63A. Okay, so what is the exemption? I will be highlighted two exemptions. First is exemption on dividend income. Malaysia derived dividend income will be exempted from income tax under the single tier dividend system. This takes effect from 1st January 2014. The tax imputation system with section 108 balance will be nil as at 31st December 2013. Any revenue expense relating to the Malaysia dividend is disregarded according to paragraph 12B Schedule 6. With effect from the year assessment 2004, any foreign dividend income received by a resident will be tax exempt according to paragraph 28 Schedule 6. Okay, exemption number 2 is for the pengurusan dana harta or dana harta urus bonds. Discount or profit received from the sale of bonds or securities issued by pengurusan dana harta Nasional Berhad or dana harta urus sendirian Berhad is tax exempt. This takes effect from year assessment 1999. Fitri, next week is tax test.
Okay.
So I want you to help me in read subject.
Okay, oh read.
Ah.
Read actually the first first four chapter is actually easy, but the number 5.
Oh, I know why easy. Because
Why?
you present, right?
Yeah, we design.
Yeah.
But for 5.0 distribution, I not really understand about it. You understand?
I don't understand.
So how? La 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 la.
Hey.
Ah, Hasan. Apa tu?
Cinglai.
Cinglai. Hasan. Why? Why you
Want
come
you
here?
to teach us?
Teach about what? What you study for?
Next
Of
week.
course.
Oh, do we have test next week?
Yeah.
So, what's the problem?
We don't know about distribution to unit holders. Read level.
Alah, distribution to unit holders. So easy. What? About what? Rate level. Okay, let me explain to you.
Why you so arrogant?
Wait, okay, because I study about this.
Okay.
Okay, let me explain to you. Okay, when we say about distribution to unit holder under rate level, the key point to remember is 90%. In order to boost the market on rate, the Act specifically exempt listed rate from tax on its total income, provided at least 90% of total income of rate in that particular year is distributed to the unit holder. So that is the key. To ensure there is no income tax payable by the rate, we must sure that the amount of total income distributed must exceed 90% of total income. If the amount distributed to the unit holder less than 90%, no amount is available as deduction against total income. About grace period, if a rate payer intends to distribute 90% or more of his total income, but has fallen short of 90% at the end of basis period, the rate payer is given a grace period of 2 months from the closing of his account to distribute the balance to qualify for tax exemption at rate level. Regarding the withholding tax, the payer is required to deduct tax at the rate applicable to that unit holder. Withholding tax of ITA is a final tax. But the resident status of unit holder is based on the nationality of the unit holder. In case where the unit holder are able to confirm their tax resident status directly to the payer, such confirmation may also be relied upon for purpose of deducting withholding tax. For withholding tax rates on unit holder, for non-resident and resident individual as well as resident entity, they are subject to a final tax of 10% period, which is start 1 January 2009 to 31st December 2016. About foreign investor, they are subject to final tax of 10%, which is similar to non-resident and resident individual. But for non-resident company, they are subject to final tax at the corporate tax rate. Okay, lastly, for distribution voucher, rate payer shall prepare distribution voucher for the unit holder based on the share of each unit holder at the time of distribution. The voucher should contain, for example, the payment date, accounting period, number of unit held, taxable income, and others. Thanks.
Meanwhile.
Assalamualaikum. Wow, you guys are early.
Yes.
Hey, Munira, are you guys getting better?
Not yet.
Why?
Oh, where is Farah?
I don't know. She is always late.
Yes.
Assalamualaikum. I'm sorry I'm late.
Have you started? Not
yet.
Okay, for you. So let's start.
Liza, can REIT be exempted from tax at the REIT level?
Oh, as I understand, REIT can be exempted from tax at REIT level, but it does not mean that income distributed to unit holder are exempted. So these are type of unit holder, which is foreign institutional investor, that they will get the pre-deduct tax for 10%, and non-resident company for 24%, and others will get 10%. So REIT need not withhold any tax when distributed to resident company. So it excludes withholding tax on unit holder which is resident company. So that's what I understand about withholding tax.
With effect from 30th December 2017, the Proviso to Section 127 Subsection 5 has been extended to allow unit holders to apply for tax refund in the event such unit holders are exempted from income tax. Okay, so now I will explain about the responsibility of REIT. So where a REIT distributes income to a unit holder other than a unit holder which is a resident company, tax need to be deducted. So the net distribution is paid to such unit holder and the tax deducted shall be paid to IRB within 1 month or extended period allowed by the tax authorities after distributing such income. An account must also be rendered to the tax authorities. The non-compliance to this requirement will result in the first one is a penalty of 10% of the unpaid tax, and the second one, both the tax deducted and the penalty are debts due to government. So this applies on or after 2nd September 2006. Prior to this, the penalty is imposed on gross distribution. With effect from 8 January 2009, the tax authorities may remit the whole or part of the penalty if good causes are shown by the
How much is the percentage for the disposal of RPGT?
Starting 1st January 2014, disposal of real property will subject to RPGT. Within 3 years, it will subject to 30%. 4th years, 20%. 5th years, 15%. But after the 5th years, it will get 0%.
Oh.
You guys know what is the fees that will get tax deduction?
No.
Okay, let me explain. Start effect year assessment 2006, legal, valuation and consultancy fees in connection with the establishing REIT will get tax deduction. In year assessment, where REIT commence business, prior to approval by Security Commission. Do you understand?
Yes.
Now I understand.
Thank you, Moon.
Thank you, Moon.
How much the balancing charge to disposal?
Oh, wait, yeah. Oh, if a company wants to dispose industrial building to REIT where the initial allowance or annual allowance have been claimed, then the disposal will not have any balancing charge.
I see. Okay.
One more. The stamp duty will be exempted if all instruments of transfer of real property to REIT is approved by the Securities Commission.
My name is Atina Umaira. I am going to conclude on our topic today, which is real estate investment trust. So basically, this is the summary of our presentation today. Okay, the tax incentives provided to REIT will further boost up the development of REIT in Malaysia. The government of Malaysia has done so many with the hope that REIT will be able to reap a higher profit from this, which in turn pays a higher dividend to the unit holders. Thank you.
Peace.